burden is light. Psalm chapter 119, verse 76. Let your steadfast love comfort me, according to your promise to your servant. Psalm chapter 73, verse 26. My flesh and my heart may fail, but God is the strength of my heart and my portion forever. Psalm chapter 27, verse 1. The Lord is my light and my salvation. Whom shall I fear? The Lord is the stronghold of my life. Of whom shall I be afraid? For my yoke is easy, and my
Yo, good morning, everybody. Hopefully you guys have had a good weekend so far. Yeah, we got a lot to discuss today between the Iran potential deal, what's going to happen, obviously. But before we do that, I do want to pull this up for those of you that may be new. So on these calls, basically every week, this is essentially what we're going to go over. We pretty much go through multiple asset classes from the bonds yields up to the indices. And essentially, we just dissect everything, which this analysis is called risk on, risk off analysis. And it gets real deep, right? So it's a little bit long, but nonetheless, it's worth every minute because we talk about a lot of different stuff. These topics, many other topics related to, decision making and whatnot. So again, I appreciate you guys being here. These calls are very deep, like I said. So be ready to take notes. If you guys have any questions, let me know. And if you do get value from what it is that I do here on this channel, don't forget to like the video, subscribe to the channel. It definitely helps me get in front of more traders that may need help, right? And I think we have a process that's worth listening to, which has been proven over the last 5 years. So this year I've been trading for 7 years, so it's about to be pretty interesting. We've came a long way. Alvinity. That's an interesting word. Appreciate you hopping on. I'm gonna just call you Alvin. Is that cool? Hopefully that's cool. What's up, Maddie? Strat King. So yeah, it really depends. Strat King. I'm not necessarily in a rush. We start on the bonds and yields because that generally will dictate kind of, what the potential interest is going to be for the other asset classes because it has such a heavy influence. I know, many traders, they pick an asset class and that's all they want to focus on. But what you got to realize is, going back to this this rubric here, there's a reason that all these asset classes get looked at. It's because all the markets are connected with one another. You know what I mean? So what's happening in the indices can have an impact on the currencies. What happens in the currencies can have an impact on the indices, right? What happens in the bonds and yields has an impact across the board because currencies for a country chase yields, and they're heavily influenced by what the bond market is going to do for that particular asset class. So before we get to, other assets, obviously there's a reason we start here. So I hope that point is driven home for you guys. What was that? Oh yeah, no worries. I appreciate you clarifying that, Shrek King. I was asking, can you look at the Euro futures since you'll be? Yeah, no, I trade futures. I don't look at Euro USD currency pairs. The futures contracts, futures in general, they're more professional. They have less leeway to like increase the spread and whatnot and have this like discrepancy across the board. So even if you're trading like just the Euro USD, or like not the futures, you still want to refer to the futures contract because that Euro USD feed is going off of what the futures contract is showing you, if that makes sense. Because the futures element, that's the professional side of everything. Every broker, obviously, when it comes to currencies, has their own pool of liquidity that they pull from, and that's why every data feed on different, I guess, like, there's like capital.com, there's, whatever.com, right? Sometimes the highs and lows are different when it comes to currencies. And that literally is the proof that these brokers have their own pools of liquidity that they, induce trade from. So and they have the leeway to kind of manipulate the spread and, a little bit more leeway to be reckless, right? That's why when you look at um, a certain data feed, it looks different versus another one when it comes to currencies. But that's like one of the main reasons I moved over to indices, because I was sick and tired of seeing those discrepancies and getting stopped out. But then the other data feed showed I wouldn't have been stopped out. It pissed me off a lot. I started with GBPUSD. That's how I got my, initial success. I like the speed of GBPUSD. When I was over there trading with FTMO, right early on, before they banned U.S. traders, stole my $60,000 withdrawal and then never reinstated it, even though they're now taking U.S. clients again. But yeah, I definitely think that if you guys do trade Euro USD or any of that, it's still best to go with the futures contract, because again, that's the professional element. It still has some room to play around a little bit, but not as much. Obviously, there's manipulation no matter where you go, no matter what asset you trade, but it's the little things that they matter, right? If it's like 5 pips off versus another data feed, and that 5 pips could have kept you in the trade. I mean, if that happens enough, and there's a different perspective you can have, a different asset you could trade, or pool of data you could trade. Most traders end up, as they mature as a trader, they move to the futures contracts. So yeah, I trade futures. Yeah, good. That's very good of you to do, Strat King. I just saw your header saying you have a segment for that. Most people don't know Euro. Yeah, I know exactly. That just shows you that people don't know what the hell they're talking about. Most people have no clue what the hell they're doing, but they're trying to. It's like the blind leading the blind, and it's a tragedy, honestly. But that's why I have a YouTube channel, right? That's why I come out and I do what I do, because I was hurt dramatically by people that don't know what the hell they're talking about. I was hurt by taking signals and people that sound like they know what they're doing and they have a big following, but they don't. And only time can prove it to you. And by that time, you've already wasted a lot of money. So it's like you're back to square one. So I just figured that, once I got success, once I hit consistency, I was sharing my perspective for a while in Telegram, but then I was like, you know what, let me just start a YouTube channel and really dig in. And, we've been doing this ever since. So yeah, ALZ, welcome. I'm not sure what you're trying to say there, but welcome. But yeah, so with that out of the way, again, take a screenshot of this. This is basically an outline of what you should be doing every single Sunday to get the best view of what all these asset classes are doing. And then as a result, you have an understanding of the market as a whole, so that when you get to the asset of your choice, you can have some of these other back-end layers of understanding. You know what I mean? Because the structure slide is being covered. Oh, whoops. Sorry about that. There you go. I actually have this, Maddie. I have this and I believe one other one posted in the free group and in the private group. So this resource, it's not the only place where this resource is at. If you go look at some of the pinned messages, I believe it's there as well. So yeah. So that being said, oh wait, whoops. Let me pull up the other version. Actually, this is the student guide. So yeah, there we go. This one's more like for the student side. the other one was a part of the slide that gives me reminders, just so I don't forget what to include, just in case. Because we talk about a lot of things, right? Sometimes we go talk about different questions you guys ask, so that's why there's two different ones. But yeah, take a screenshot of this one. Okay. And again, all these topics get talked about, so we will dive into it. Avinity. Oh yeah, of course you could join the free group if you want. I believe I have a link in the description. Let me know if it doesn't work, because sometimes it refreshes and I have to create a new one for, I don't know why they're temporary. I turn it off of being temporary, but I don't know. Discord always tries to mess around with me. But I haven't had anyone saying that there's any issue. So I think that the one that's in the description for the free group should work. If it doesn't work, obviously just let me know. And then of course I have my private group as well. If you guys eventually want to join that too, if you like my style, if you find that these calls get you progress and you want to partner a little bit deeper, and join the students that are in the private group, where we go live every single day, right? 7 days a week essentially, except Saturdays. So that option's available too. Where do we access your free group? Again, it's in the description. It should be a link in the description. And again, if it doesn't work, just let me know, and I'll just make a new one. So yeah, with that housekeeping out of the way, we do have a bank holiday. So Memorial Day, right? Shout out to anybody in the military. Appreciate you for your sacrifice. But yeah, that holiday, if you guys remember, if you've been with me for a while, the rules around a holiday is the day before, day of, day after a holiday, it's low probability. Does that low probability label mean you can't find trades? Of course not. You guys see me trade any condition, finding setups. Now, whether I take them or not obviously depends on, what's going on in the chart. What in terms of the process is in alignment, right? Like intermarket relationships, what time it is, what liquidity is available, a laundry list of different things. And if things don't align, obviously we'll call out ideas to study. Most of the time they work. Sometimes they don't. We're not perfect. But yeah, you want to approach a holiday thinking about the day before, day of, day after a holiday as a low probability condition, most likely high resistance. And because that's the case, right? The reason that that's the case is smart money is celebrating the holidays, right? Like if you had, the opportunity to trade full time, you want freedom, right? You're not going to be obsessively trading during a holiday, right? Especially since most money is on the sideline during holidays. And when they come back, things start to get a little cleaner and big moves start to take place again. But yeah, you want to be extra cautious when it comes to holiday trading. If you trade it at all, you don't have to, right? Same with like NFP, FOMC, right? Like if you just don't take a trade at all during those news events for the whole career that you have, you're not going to be really missing anything. What you will save yourself is probably times when you're going to take a loss, because the invisible hand is in motion around those times for good reason, right? It's kind of like what it's there for. Whenever there's a news release, it's late, right? So, things are already starting to be priced in. And then the news comes out, and then you see the massive volatility just to unseat people that are either going with the underlying narrative or those that are against the narrative. And then, of course, price snaps back into what that higher time frame is doing eventually. Okay. So, yeah, with that being said, again, bank holiday. So, Monday is a no trade day. It's going to be a abbreviated day. Sunday, we don't take a trade. Obviously, Tuesday does have a news event that we'll look at. But again, the day before, day of, day after a holiday is low probability. So in my opinion, the best day to trade is going to be on Thursday. We'll be live, obviously, here on YouTube on Tuesday. So, we'll take a look at what's available. But again, we're going to be very, very calm as always. And we're not going to be in a rush. We're going to let price come to us as always. But there is a news event here. It's at 7 a.m. So pre-market open to market open, that first 30 minutes, it's going to be best because this news event is later during the silver bullet time window. This is 7 a.m. Pacific Standard Time or 10 a.m. Eastern. So it's going to be best when there's news like this later in the session, you're going to want to wait and then try to see what happens, because you could be caught up in the manipulation that happens. Okay. Like they could use that beginning stage, that beginning time window from the pre-market open, right? So London pre-market open to this news event after the open. They could use all that, price action beforehand to be manipulation, get you thinking one way or another. And then the news comes out, maybe it manipulates aggressively one more time, and then all of a sudden the real move takes place. Remember, this time, 7 a.m. Pacific Standard Time, 10 a.m. Eastern Time, that's when a new 4-hour candle opens. Okay, so if you can just gauge what that next 4-hour candle is doing, and wait for this type of time when the news event comes out at this time, you could just think power 3 on this from this time window and beyond, and then you could a lot of times get in line with what the real narrative is. Of course, a higher time frame is important, more important than any other time frame in my opinion. I personally spend more time on that daily, weekly, monthly, quarterly chart than I do on the lower time frames. That's proven by what we do here on Sunday. I kind of lead by example on Sundays by never even pulling up anything beyond, say, a 4-hour chart or like below a 4-hour chart. And again, the result shows that, we're always in line with the narrative generally, and it all starts from Sunday in this process. Okay. So again, we think power 3 every single time we start a new week. So Sunday, Monday's accumulation, manipulation. Tuesday, Wednesday can set the higher, the low of the day, or higher low of the week, depending on what the direction is that we determine. Then if it expands, which, Tuesday, Wednesday sets the higher, the low of the week with expansion. A lot of times if it sets the higher, the low on Tuesday, it'll expand into Wednesday. And then once we fulfill a higher time frame point of interest, like some liquidity pool on the weekly or daily chart or quarterly chart or whatever higher time frame, if we tag one of those levels from that higher time frame on Thursday, many times you'll get that rejection to begin. Okay, and then TGIF will happen essentially starting on Thursday, right? Or it'll prep for that TGIF if Thursday hits a higher time frame level that we were looking for. Now, if it doesn't hit that and it just continues to expand through Thursday, and you can see that we're reaching into a particular level, but we haven't fulfilled it yet, going into Friday, a lot of times it'll open up, race to that level early on, and then start to give you that rejection. Obviously, it's not every week that it happens. You got to make sure you're looking at what leads up to that. But a good rule of thumb is having this perspective, right? It's a good baseline to go into every single week anticipating. Okay, because every single day has a place in the weekly candle, aka the weekly range, and the characteristics relative to that certain day and that certain week can be very, very helpful when you're trying to analyze what the weekly profile is, what the daily profiles are, and where we're at in price, right? What phase are we in when it comes to Power 3? And many times, market maker models. Okay, you guys know that the market maker model is the crux of everything that I do. And, like I said before, I'm going to really, really push you guys into observing that way of thinking because at the end of the day, that's the type of trader I am. I trade market maker models. I have 5 entry models, well, 6. I have 2 main models, but everything comes back to that type of framework with Power 3 and market maker models. Okay, anything beyond that is extra. Okay, but I want you guys to really, really zone in on that stuff because you'll get a lot from what I do because that's what I focus on. If you do allow yourself to focus on those concepts, there's a lot of concepts. There's a lot of different ways of doing things. Okay. But at the same time, you don't need everything. Right. And, I don't teach everything. Right. I know a lot. I've been trading ICT concepts for 7 years. Well, this year, 7 years. So obviously there's a lot of different things we could talk about. Um, but I want you guys to really, really zone in on those concepts. Power 3, market maker models if you haven't already. Obviously, if you're still going through the 2022 model or some of the more preliminary foundational understandings and lessons, you want to stick to that because market maker models and Power 3 incorporate many, many things when it comes to mastery of those concepts. Okay, you can't just see a market maker model pattern or Power 3 pattern and think that, okay, well, I just have to look at that and that's it, and I should be rich, right? To be effective with that stuff, you want to make sure you have supporting ideas, supporting tactics, and I try my best to get you guys those supporting tactics here, and also expressing some of the more advanced perspectives too. But when it comes to this week, again, holiday week, it's going to potentially be a slower week. We do have the Iran situation going on, so you got to keep tabs on that. We've been glued to this, trying to see all the different developments because it obviously has an impact. Okay, so just keep that stuff in mind. And so that's kind of the outlook for the overall, week of economic news. Preliminary GDP. We have also got to mention, we just got our new Fed chair here in the United States. I think he is a massively bullish Fed chair. Okay, like he's going to do things that are going to be very, very good for the economy, hopefully. Obviously, that's the hope. But, we'll see how things go. There's going to be massive changes to the U.S. Economy. There's lots of things happening. I mean, there's crypto that, a lot of things are happening with, which I'll talk about at some point because I'm heavily invested in crypto. Not that you should be, but, there's lots of opportunity long term when it comes to that asset class. So, and we could talk about that if you guys want us to, if we have some time today. But yeah, so again, the main target of execution this week is going to be maybe Tuesday, but it's low probability, potentially high risk depending on how it delivers at that time. Wednesday, there's no news, so you're going to be heavily focused on macros. We're going to be looking for Tuesday and Wednesday to have those characteristics I outlined for Power 3 on the weekly perspective. And Thursday is going to be the most eventful in my opinion. So you could literally skip every day up to Thursday this week and only trade this day, and you should probably do reasonably well when it comes to identifying setups. Okay, so just keep that in mind. And then Friday has no news as well. So again, heavily reliant on macros in our liquidity mapping list. And yeah, so we'll see how the week starts. But with that being said, let's go dive into our first asset class we're going to do analysis on. So we have this decline in here from the bonds that took place last week. But, declined, swept the level that I talked about, if you remember. We talked about this low. We talked about this exact characteristic happening. We literally talked about and outlined the fact that price opened up, ran to this low because it hit this significant low here. Let me see, is that a yearly low? Yeah, it was a yearly low. It's 2025, yeah. Okay, so we ended up taking out that yearly low. I called for it to take that out. I called for this to go lower. If you guys just go back and look at some of the videos, or if you've been here, we've been 100% correct on where price was going to go in this asset class. As a result, this also has had a pretty significant impact because remember, the bonds dictate or influence on the back end what the currencies like EU and GU and the indices are going to potentially want to do. Okay, because if you're going to look for a bullish trend in those asset classes, you want to see that this is bullish and the yields are bearish, because the yields have the reverse effect. They're reverse correlated to the indices and foreign currencies, but positively correlated with the dollar. So if we want to see, say, bearish indices, we want to see that the bonds are dropping, the yields are rallying, and at the same time, we should be seeing the dollar also rally against that as well, right? Because it follows the yields, right? It's the same dynamic with every bond and yields market for every currency of every country. It's just the way it is. A typical rule of thumb is currencies chase yield. So if you're looking at the dollar DXY and the yield market for the US, if it's rallying, you should expect that the dollar is going to rally. Unless it's cracked in correlation, which that tells you something as well about the current condition. It's low probability, right? Because market symmetry won't be in alignment at that time. And it's very risky because at the drop of a dime, things could get right back in line with what market symmetry calls for. And then if there's that crack in correlation happening, it could snap back into correlation very quickly. Okay, so that's the risk when the market is not correlated or symmetrical, or if you just don't understand the market dynamics in terms of market symmetry, you can be really blind to what's really going on. And then out of nowhere, you can end up seeing your whole analysis, because it's not rooted in something fundamental like market symmetry, fall apart, right? So again, that's why we start here, and that's why we spend so much time on it every week. But yeah, so again, this did exactly what I assumed it was going to do. I said that if it takes this low, we got to be very cautious, because external range liquidity would be taken at that point, and we may see price return back into this yellow box, which again I had outlined as well. Let me see, where did I post? Where did I post that image? Did I post that image? Can't remember if I. No, I did a one-on-one with a student the other day. Where did I put it? I don't know if I took this screenshot and sent it to everybody. I know I sent it to him though. That's going to be unfortunate if I didn't send it out. Sorry, bear with me, you guys. I want to find it. It's very, very helpful. Damn. I guess I didn't send it out. I just sent it to him, or talked about it on a live call with him. But I was essentially just breaking down what I've talked about before when it comes to price seeking external, then internal, external to internal, and then how the thought process has to be when you're looking at a large liquidity pool get taken out in the higher time frame, because many times it's going to trigger in some type of response going against whatever price was just doing. Because you got to think, right? If they take out a low like this, right, they're triggering in sell stop orders, basically people that think it's going to, support turn resistance and then go lower. But it's also, stop losses for people that were trying to buy, institutions that were trying to buy down here. So, what happens when they trigger that in, that's external range liquidity. Price doesn't just go one direction, right? Price takes external liquidity, seeks internal liquidity, and then declines, right? Once external liquidity is taken, if it's bearish like this, externals to lows, we want to look for internal to be targeted as well. This type of delivery here is a breaker. It's also a balanced price range, right? Sell side, buy side, sell side. So when price takes that, it triggers in stops, a flood of orders come into the marketplace, and then price looks to return into the internal range, tags a PD array that's inside that little range from, say, this high to that low, because we took stops, and then price declined and retraced, right? Hits this internal PD array and then seeks further external range. Price then fulfills external range again and then does that same protocol. This is a smaller view. This is a larger, more exaggerated view, right? It took a significant yearly low, and then off that yearly low, because people think support and resistance, price ends up victimizing them, comes back, tags this. And so now what we're going to be waiting to see is whether this is going to hold or not. Okay. We have a large wick here, a reasonably sized wick, followed by displacement. So this upper piece of that fair value gap should not be targeted. It should be left available, right? Because it's already got sell side, buy side with the wick, and then sell side again. So that's a balanced piece of price delivery. We also have this idea here, buy side, sell side. So this should be a balanced price range if it trades back into it. We should stay in that lower 25%. But because we have this here, we should not even see it come back up into that. We should open up. Maybe it looks to wick one more time. Maybe it tries to fulfill this real quick. It did perfectly basically come back to that low. So we got to see what happens, right? If we're going to continue to be bearish, we're going to want to see this order block get taken out at some point. We want to see this act as a brick wall. If we just start to see another candle open up and it returns to the midpoint of this, and then we break outside of that, and it starts gravitating to the high up here, we got to classify this as a potential inversion after a stop run. It's significant with the fact that it took this stop out and then rallied up. And if it overtakes this off the heels of a stop run and then returns back into it and respects it and rallies outside of it, that shows you that this is also a potential change in state of delivery. Okay. It's a form of change in state of delivery, which is the inversion fair value gap after a stop run. Okay. Aside from the traditional change in state, which is this order block or consecutive down candles that gets violated, this is another variation because, again, it's leaving behind a balanced price range. Okay. And if we move up in time frame, I'm sure that we'll be able to find, yeah, this is a big order block here. So we can also go to the 2-day chart. We can see that this is also a 2-day bullish order block that got traded above too. And so again, if we see this fair value gap, well, we could use this actually. That's a suspension block. If we see this get above that and invert that, we have to look at how price is going to treat this fair value gap, this suspension block, when it comes back down into it. Because if it comes back down into it, basically creating an order block and does something like this, right? Say it creates a down close candle, right? After it takes that, maybe it wicks the 50% level there. And then all of a sudden the next candle goes like this and trades beyond it to the buy side. We'll have an order block here and then a secondary order block here. That's what I call a double change in state of delivery. And if you can get a double change in state with an inversion fair value gap like that, most of the time you're confirming that order flow has now set a protected low and price should end up targeting buy side again. And the sell side would have to be, engaged later on if it was to violate that level again. Okay. And as long as it stays inside this suspension block until proven otherwise, doing what I just mentioned and shows that characteristic, we'll continue to keep going lower, right? Like if it gets above this and creates a double change in state until that's violated, we'll continue to go higher if it keeps supporting that idea. But if we respect this, we have to continue to allow for this to continue to go lower until that second change in state occurs, or this fair value gap gets overlapped and then treated as support and then displaces. But if it overlaps this, treats and comes back and treats it as support, a down close candle is going to have to do that unless it shoots a wick down there and then just rapidly, rallies. But in that instance, if it breaks through the 50% of this, we're 100% sure that we're going to now look to target further buy side. But that's obviously predictive. So what we see currently, it looks like it's just simply a stop run to retracement that could continue to potentially go lower, right? If we take this high up here down to that low, measure that out, we got 50% right there. So that 50% level, that 50% level is equilibrium. And again, we have the buy side, sell side should be a balanced price range. So we don't want to see it get even further beyond that. Again, it could get up there though, because we took the stops here. And if it inverts this level, we have to consider potential higher prices. I'm 100% sure if we get a double change in state to the buy side, or if we take out this high or simply close above this midpoint, that we will then go higher. But for now, given what we see right here, if we get away from some of the more, predictive picking a low type of perspective or protocol, we're going to have to continue to just simply look at this being a retracement to then go lower. And this retracement, if you're worried about, picking a top in this, or maybe you don't trust it in here, all you simply have to do is wait for another order block here, say this up candle. All you need to do is wait for that to be displaced, displaced through, see price then return into that and respect it, and then give you a double change in state towards the downside direction as well. Say price goes down like this, creates a down close candle, right? You could then wait for something like this to happen. Okay, let me pull that up. Right, you could wait for like another candle right here. Let me change the color so you guys don't get confused. Right, you could wait for a down close candle to take this out, and then you could wait for another up close candle to respect that order block. And then once you get another displacement from that secondary order block that comes back down and comes back up into this, once you get this delivery, you could then be certain that that retracement is now complete. And now you're getting double changes in state. If something like this happened inside this order block, say it has a down close candle that then presents you with another up close candle like this that closes inside of this and then breaks away, that is what ICT calls a suspension block. Okay, so then in that instance, again, the retracement would be over, and we would then try to look for more short positions. You could wait for that. If you're not certain or comfortable with trying to, just engage something up here as it's retracing like this, if you wanted to further confirm that order flow is in fact going to go that direction to the downside, you could simply just wait for that process to unfold. This idea is fractal. So the same thing happens on every time frame. The same, confirmation on any retracement, in order for you to confirm that, say, it's going to continue to, in this case, go lower. Doesn't matter what time frame it is. If you see this characteristic, and the higher time frame agrees, most of the time you're going to be caught on the right side, timing the correct time when price is ready to move again in the direction of the narrative. Do you guys have any questions about that? You guys have any questions about that? I don't think I've taught that before. I think I've mentioned it before, but that's a very, very significant way to wait for a setup going into a retracement. And then when you can identify that price is in fact going to now start moving in your intended direction. That's one way to do it. I teach multiple ways, right? Multiple different things that show you signatures like that. But yeah. What do you think about the fractal model? The fractal model? Not sure which model you're talking about. I know fractal patterns, when they form, like if there's a daily fractal high, you have like 1, 2, 3 candles on that fourth candle that truly confirms that that third candle is going to hold, like something like this. Say it wicks into it and starts moving. That's something you can engage if, it's something like this where it's a retracement, bias is bearish still. Once it creates a fractal high after a retracement, that's another good way to identify price is going to continue. I've talked about that as well. But the 3-bar fractal pattern has a laundry list of things that you can do with it. But if you're asking like what my opinion is on like turning the fractal pattern into a model or a confirmation, similar to what I was just talking about, I think that's absolutely viable. It's something to definitely consider. ICT talks about the fractal model that he talks about on the playlist called the High Probability Scalping Series. I encourage all of you to watch that because that's when I first discovered how to navigate fractal highs and lows with bias and narrative, and just understand fractals in general, right, from the source. It's the High Probability Scalping Series. And just, when you're listening to those videos, just pay close attention to when he talks about how fractal highs and lows can support you in bias and narrative. And he essentially talks about when price creates a fractal high on the daily chart and you get that third candle, like we talked about here, to be traded through, you've now confirmed order flow is delivering lower, right? Or you should be able to see the next, 1 to 2 candles after that third candle forms in the fractal. Like if this was candle 1, candle 2, candle 3, once you get that third candle to close and a fractal high is created, if you're still bearish, you can expect that the next 1 to 2 days should displace towards a PD array that's in close proximity to that, right? Or along the way in this downtrend. Same thing, if it's going higher, right? Once you see that candle 3 form, right, in a fractal low, once you get that closure, creating a fractal low pattern, that fourth and fifth candle can generally go in your direction. You just couple that fourth and fifth candle with a PD array or liquidity pool that's in close proximity. And if you're trying to use it as a counter trend trading idea as well, say, like in this instance, right? This is a bearish trend. If price creates a fractal low, you can expect that once that third candle forms, the next 1 to 2 candles is still going to look to try to fulfill a PD array. And then once it fulfills that PD array, you wait for a fractal high to form. And then once that third candle forms again, you could just continuously do this over and over and over and trade counter trend and time counter trend moves, but then also time the overall moment in price when it's going to actually get in line. You can use the fractal idea. You can use the double change in state that I just mentioned. And there's obviously other ways as well, but I think those two are some of the highest probability, just so you could know like when a retracement is complete, right? Or how you can trade retracements. I talk about that too when it comes to seeing price displace. When price hits an opposing PD array to that downtrend from a higher time frame, especially if it takes external range liquidity like this, which is a PD array, you could then expect that price is potentially going to look for internal range liquidity or some PD array that is opposed to that downtrend. And then, of course, you can mix the idea of a fractal high and low with this idea as well, right? When a higher time frame level is met, you want to expect that a potential fractal is going to form. And once that third candle forms, right? So 1, 2, 3, the next candle can be expected to run into a PD array. It's on full, that idea and logic is on full display right here. Okay, that's a tradable candle right there. And before this even took place, before it even took that low, I was calling for this to retrace, right? And the reason why is nested in all the things that we just talked about, okay? So yeah, again, that's my opinion on this. Hopefully all that stuff made sense. If you guys have any questions, let me know. But for the bonds and yields, for the bonds in this case, I still think that we could still see this open up and then maybe, create a fractal high here. Once it creates a fractal high, we need to also start to see this get violated. And if we get below this suspension block, it's going to be the best sign. The price is now going to continue to decline even further. And then to get a projection of where price could potentially go from that, we take the highest high and this low here that's part of that run to the highest high. We get our projection lower and we have our 2.5 standard deviation and then 4.5 standard deviation as well. If we go to the weekly chart, monthly chart, kind of see what that aligns with, and what do you know? Lines up with a low down there. It's really far away, so it may take a little while to get there, but I think I like that low right there. I like this low too. If we do start to see the bonds continue to drop, again, the new Fed chair may not make moves that are going to allow for this to drop, right? He's going to cut rates probably as much as he can, obviously. And when rates get cut, that's bullish, because rates that get cut, it's referring to this, right? The 5%, rate here for the yield. This is like the yield that you get when you invest in bonds, right? So it's at 5% right now. This also has an impact on home loans and just how much money is to borrow, right? And the cheaper this is, right, the lower the yield is, the more people want to invest in their business, the more people want to borrow money, the more business growth takes place. As a result, with this declining, the bonds start to rally. And as a result of that, the dollar declines and the stock market rallies. Foreign currencies rally, right? And if you go back to some of the other rate cut situations, you'll see that this is like something that takes place, right? It's very, very correlated when it comes to this, because this is just how, on the back end things work, which most people don't understand. But hopefully I made that simple enough for you to get, and why rate cuts are important to monitor, right? And if rates hike, that's not good for the stock market, right? It's not good for borrowing money and business growth, because it's more expensive to borrow money. It's good for people to invest in bonds, right? If the rates jump, that's when you start to see people like Warren Buffett and some of these big, institutional traders. That's when you start to see them lessen their holdings in normal equities, and then they move their money to bonds because it's certainty, right? And generally the percentage, obviously, if it's higher, they're getting a bigger yield on their money, so they move money into the bonds, right? So they get bigger yield. So hopefully that was a simple breakdown of how that works and why we spend time here as well. It's another reason why I spend so much time here, because it tells you stuff about the real world as well, so when it comes to the financial industry. So yeah, with that being said, again, these are some of my targets, but we'll see if it wants to get down there. If this doesn't get down there and it does what I mentioned a second ago and gets above this, then we have to watch that act as support. And if it does act as support and creates another order block and takes it, that'll be my trigger to then try to seek this trend line liquidity, because that's super obvious in there. So we'll keep tabs on that. But for now, again, this is just simply a displacement, stop run, external range liquidity taken, going to internal. We may see a fractal high that forms that then starts to push us lower. We haven't even hit our projection levels yet for this swing. If we come over here to this swing up here, see, we've almost hit this. You see the 2.5 standard deviation? Almost always, when you have that projection, it almost always creates a retracement when it hits this level. This is a full price swing. Even when we put it here, it aligns pretty closely with this low here that I mapped out earlier. So again, we'll keep tabs on this. That's going to be the perspective. But again, going into this week, I want to see if this connect is a retracement to then go lower. And we'll look for the same things to happen across the different, the 5, 10, and 30 year, right? We'll see if they can keep going lower and watch these same levels, okay? Now, if that's the case for the bonds, when we move to the yields, they should be doing the opposite. But this is a very, very dramatic decline in here. Every single target I outlined last week and the week prior has been completely obliterated, as we kind of assumed it would. And now we got a fractal high up here, and candle 3 has been formed. So the next 1 to 2 candles, in this instance, if it overtakes this level here, because we're already basically inside of a deep retracement when it comes to this. Give me 1 second. Man, those freaking allergies are killing me today. Sorry about that, guys. But we already have a fractal high. We got stop run. Prices retraced to internal range liquidity. We see that this wick on this candle 3 was beautifully respected beyond below the 50% level. And so that's an early sign. Whenever you see a high form like this, it's a big wick, especially after a stop run. The next candle, if you see the characteristics of it respecting that 50%, lower 25%, and price starts to really break down, and it seems like it hit a brick wall there, many times price is going to then go lower in this instance. Same thing's true if it's bullish, right? And it creates a low, and then the next candle respects the midpoint, right? And they can't even really come back to it. Once that third candle forms, 4 and 5 should be able to continue in the direction it's going in. right? So it's a good rule of thumb. But in this case, we have a retracement here. We do got to observe what it's going to do, right? It does look like it's just a retracement. But then again, right, if we take this here, right, we see that little gap in there. We took a significant high here and here. We do have trend line liquidity all down here. So if Kevin Walsh, whatever the heck his name is, the new Fed chair, if he is going to cut rates, I would not be surprised if this stop run here, it's ironic the timing, right? It's doing this right at the time where he's taking over, and his whole shtick is that he's going to cut rates. That's why Trump likes him too, right? Because he's going to cut rates, and the stock market should explode as a result of that. That's why they want the rates to be cut. For one, it'll blow the stock market up through the roof, and then also it'll stimulate economic growth because companies will be trying to expand, trying to borrow money. And then we should see this just decline. He's obviously going to have to do it slowly. So over time, we may end up getting down here. But I would say that, this here is an order block. We have a stop run. And we got to just observe. If this swing low is taken out, we may see price dig even deeper. But if you want to be extra certain, you'd want to wait for this low to be violated to turn this bearish. Otherwise, it could just simply be a deep retracement that then keeps going higher until they start making more moves. But this is a very significant retracement. We definitely got to keep tabs on it. We have an order block here. We also have a order block in here. So we want to keep tabs on that. Price has already shown that it wants to respect it by wicking into it, refusing to go through it. So I would say that, again, we got to watch this fair value gap. But this midpoint here is going to be significant. If we can't even attempt to get up there and it just slides through this fair value gap, that's putting this trend line liquidity in jeopardy. And we have this relative equal low here that I outlined last week as well as a possibility for when price does turn. If we do get price to break down, if you take this low to this high up here, if this ends up beyond 50%, and then say it returns into this fair value gap and then uses it as an inversion, again, we're starting to see the narrative shift, right? This is the same tactic we use on every asset, right? If this said NASDAQ and not the yields, I'd be thinking the same stuff. It's all universal. It's the same. Okay, so that's something that we're going to have to keep tabs on here. But until that's proven, it still has a chance to want to go up. We are coming off of this. So, we'll see how this is treated going into the beginning of the week. Again, it's a holiday week, so you got to be a little bit cautious. So, yeah. And this is basically my opinion. I don't think I have really much more to say about the bonds and yields. Let me think. Yeah, that'll just about wrap it up for the bonds and yields. So do you guys have any questions before we move on? Oh, damn, it's already been an hour, huh? Time flies when you're having fun, huh? I'll make sure that the next analysis on these other assets is quicker. But again, it's very important to spend a lot of time on these assets to understand them, the bonds and yields. I've proven it over the last 2 years being public as far as why we spend so much time on this. And yet again, this entire year, for the most part, high 80-ish%, every single week we've been correct. Give or take, a handful of times where, price just kind of acted sporadic and we had to kind of adjust. But for the most part, the whole entire year's recorded sessions and how every week has ended sends a pretty loud statement as far as, the process we use being effective. And again, it all starts here. Most people just want to look at, one or two assets, but it's like, okay, you're trading blind kind of, because something can happen in another asset class that you're not aware of that then impacts you in your asset that you are aware of. Okay. So yeah, do you guys have any questions? If you guys don't got any questions, just throw one in the chat just so I know where everyone's at. Remember, I'm not here to just talk, right? I'm here to cater to you guys. No question is dumb, right? Any question you guys ask, I'll try to answer. If I don't have an answer to it, obviously I'll let you know. But definitely make sure that you feel comfortable asking questions. Okay. Okay. I'll take your guys' word for it. So that just about does it for that asset class. So now let's move on to the dollar. Okay, let's kind of make this, take over the whole screen real quick. So daily bullish order block, let me see what that was. Okay, yeah, so this daily order block here was when price was trading into this. If you guys have been with me, we called this entire move higher, and it hit the exact target that I've been calling for over 3 weeks. We were 3 weeks ahead of this likely rally up. We saw the yields going higher. So what does that do? Drags the DXY higher. It had a hard time breaking through this level, right? So it was stalling out. And then we got change in state of delivery here. And then price broke through this monthly reclaimed fair value gap. We had this high here and this high here. We have just sell side in this area. So that's inefficient to the buy side. Then we had this liquidity void. I talked about that liquidity void literally since back here, right? Since it was created and pushed away. I said that this is balanced in here if we're going to be bearish, but there's that little gap in there that's not. It's imbalanced. It's inefficient. Okay. There's no sell side or buy side happening in here until this level. And that has buy side and sell side offered. So that's balanced in there. And then price displaced up into that, offering only sell side. So this level up to that high, up to this lower portion of this candle, that was all inefficient to the buy side. So what did they do? The yields ended up rallying, and then they ended up turning this around from this quarterly suspension block, the high of that quarterly suspension block. We saw a wick being rejected from on that weekly perspective right here. It refused to break the low of that wick. So price continued to respect it until it really respected it. Okay. And then price ended up getting through. I was calling for all these levels in here. Again, I was very, very loud about it every single week. And in my private group, we talked about it pretty much every single day until we finally met it, right? It filled in the entire thing. Okay. So the logic there showing that this is only one-sided delivery and how that's inefficient, and price will want to come and reach up into it, merging that idea with the yields having a heavy impact, that being this market, having a heavy impact on the dollar and how they're correlated, and how currencies chase yields, that justified this entire move up. And that's why we've been correct, right? And that's why we're able to call it and see it before it happened. Okay. So now that we've fulfilled this, like you guys see the markup saying here, this is an order block in here. So if this is going to keep going higher, I'd prefer to see it hold that. We have sell side, buy side that's now efficiently delivered, and we've taken this high out. If this is going to go lower, we need to see it get back down below this monthly reclaimed fair value gap. Because if it does do that, if we see this break down, we have the bullish order block being disrespected. We have a bunch of gaps in here, right? From this new week opening gap to this new week opening gap. Then we also have this new week opening gap. Okay, so breaking through 3 new week opening gaps to the downside, not holding at this bullish order block, not holding in this monthly level, which is a reclaimed bullish fair value gap, which is right there. Okay, if it breaks through that and it doesn't hold it, then we have to watch and see if it's going to be respected to then go lower, especially if the yields end up getting dragged through the floor, which is what they may end up doing very soon. But until that happens, given the overall structure right now, it looks like price is somewhat consolidated, but it's rapidly moving up. It's kind of stalling out in here. You could see what they were doing. They're accumulating and balancing out this liquidity void. So they're making sure that every area in that piece of price delivery is balanced out. It's like a paint roller. Goes over it once, goes over it twice, over it once. There's still some holes, goes over it once more. And so that's pretty much what they do here with these types of gaps. They do the same thing when it comes to fair value gaps too, because it's a form of inefficiency. So they got to make it efficient. What does that mean? Everybody gets a chance to be in the market, right? At any moment, you'll take a trade at any price level. And because price is efficient, it has to offer that level because there's interest. There's more so interest at certain levels than others, but it doesn't matter, right? It's still going to offer it because somebody's buying and selling at every single moment at every single price level. So it has to be efficient. So what does it do? It goes over it. Sometimes multiple times, sometimes just one pass through, and then that one pass through offers both sides, right? Maybe with a wick or two different candles, buy side and sell side, before it delivers away from it. Okay, so that again is why this is important and why we were able to target that and why it makes sense that price ended up running up there to target that, because it was a liquidity void of liquidity to the buy side here, and void of liquidity entirely when it created this pretty solid gap in there, which again is a liquidity void. There's no trading in there. So they had to come up and offer it because people that had executions to go short or to go bullish at 99,349, or let's just say 99,516 to 99,176, all those different price levels and executions that people probably tried to do, they didn't get a chance to get in until this happened. And then until this happened. Okay. So now, if we were to say break out to the buy side, that puts into perspective this buy side delivery up here. Okay. On that larger range, right? When we go to that monthly chart, we're able to then kind of map out equilibrium, which is somewhere in here. If we go to the weekly chart, we can get from this low here up to that high. We got stop run here. You could, drag it down to that as well if you wanted to. I like using the most recent swing low that had the most energetic price delivery away from it, and then the high that creates the retracement within a particular range. That gets you closer to the actual equilibrium that's being referred to. And you could see, I also talked about this as well. I said that because we're at equilibrium of this larger time frame range, we could see choppy price delivery. That's also something that kind of further justified that this run here was going to come back into the range because we were bouncing around equilibrium on that larger perspective. So that was another supporting piece of information that allowed for us to then seek this buy side liquidity and this gap up here, especially when the yields agreed, right? So all of that conversation right there is kind of a, deep explanation as far as why I was able to call this, because I did call it publicly and privately well ahead of time, before the fact. And I also talked about all this stuff I just talked about as well along the way. Okay, so hopefully all that stuff makes sense, because this is not a one-off thing. This happens all the time when certain gaps are involved and, the bonds and yields are doing something in particular. So these are things that you want to keep tabs on and always try to go in and study, because again, it's a very common occurrence. So again, unless this violates this pink level down here, this will be my invalidation there. And depending on what the bonds and yields are going to do, it's going to have a heavy impact as far as what our narrative is going to be solidified in. Okay. But for now, obviously price has decided to run up. We're above certain levels that should hold if it's going to be bullish. So we'll see what happens in here. This here is a high resistance level of liquidity. Okay. So when price trades into that, say it displaces up there and it creates like some type of low in here. I don't see this rapidly just repricing through that with one shot. I would prefer to see something like this take place. If it rallies up like this into this level, I'd like to see it set a low, maybe take that low, then look to go up, because in that case, it'll then engineer low resistance liquidity, which will then take precedence over the fact that this is high resistance and consolidation. If we come up here and do this, this is called deferred liquidity. When you trade into a high resistance level, generally it's not going to just slide through. Generally, it's going to tag it, create a short-term low, tag that short-term low, get people thinking that, oh, yep, this is strong resistance. It's strong resistance. It's not going to go up there. And then it'll take them out and then rapidly go up, potentially set a breaker, whatever your model is that you like to see. And then it'll behave in a much, much more favorable form of liquidity than it would when it just simply trades into that high resistance level. Okay. So we'll keep these things in mind. And again, the invalidation here. That's my further bullish. Oops. See, that's the bullish invalidation right there at that level, okay? And again, if it breaks down, we're breaking through multiple PD arrays. Some people could look at this as the low to the high, equilibrium. Maybe it's coming down to a discount. Maybe that, could unfold, but we'll use the bonds and yields to gauge whether that's the truth or not. But I would not want to see this come down into a deep discount because, again, we have buy side, sell side, basically consolidation that we've now traded outside of it, right? So if it's going to continue to go up, we don't want to see a deep retracement back into that range. Otherwise, you run the risk of this just simply consolidating. Okay, and then maybe it doesn't want to just go higher or lower. Maybe it just wants to bang around in that level, which could be the case. So if we're going to assume that this is going to rapidly go up or be a reliable run to the buy side, we want to see shallow retracements. Preferably, it's not even going to take this because, again, we have buy side, sell side, buy side again. That's all balanced. There's no real reason if they're bullish for them to want to get down into that. Okay, they spent a lot of time down here. Maybe they use this to accumulate buy positions as they look to then rally up. And again, if this was to break down below this pink line, breaks down below equilibrium, say it takes off aggressively, then we do have these relative equal lows down here that would be justified by the yields taking a nosedive as well. And then us seeing this get below that pink level here, plus bearish yields, that'll then put this, squarely in my crosshairs, and then that'll be the main focus for us. But up until that point, price is way up in a premium up here. We don't want to see, this reclaimed fair value gap get taken out if we're going to try to see this go higher. So again, we're in a range right here. It's pretty nasty. So these are just some things to consider. These are things that I'm going to be watching as we go into this new week for the dollar. Let me see. Sometimes price goes with speed when the range is already balanced. But like you said, yeah, of course, sometimes, right? Sometimes price does a lot of things, right? Sometimes price just kind of colors outside the lines. But what I'm trying to really communicate here is what we would like to see for, I guess, the best case scenario. And then, some of the different considerations of variations. Like it could run down into this, tag this upper portion. But if price was to break through that and then dig deeply into this previous potential BPR, that runs the risk of the balanced price range being invalidated or just simply getting back into consolidation. So if we're going to be trying to observe this continuing to go higher and look for signatures that support that idea, support that idea and are things that we can trust, these are some things that you want to be paying close attention to. Okay. So hopefully that makes sense. Let me see. Like you said, the balanced price range is high resistance, zone 2. Yeah, if it leaves it and then comes back in, it's definitely high resistance as well. So price tends to slow down. How to differentiate between both? In some instances, you just got to wait, right? You kind of just got to wait for price to show respect, right? Like this idea that we're waiting for here, that's going to show respect to that level if it trades down into it and then rallies aggressively. If it does that, then we can take off the table that price has a chance to get down deeply into this. Another thing too, obviously, is what are the intermarket relationships doing? What day is it? What time of the month is it? Because again, the monthly range has a power of 3 as well. If it's doing this at the end of the month, like it is here, a lot of times you're going to get caught up in a slower move because the whole entire month has already passed. And the middle 2 months are the best times to trade because just like how Tuesday and Wednesday are the most likely in a weekly range for price to expand, the 2 middle weeks in a month are the expansion phases generally in a monthly power of 3. So the most dynamic price delivery is going to happen generally around those 2 middle months because we got the first week or the 2 middle weeks in a month. The first week is accumulation manipulation most of the time. The 2 middle weeks are expansion. A lot of times, really rapid, beautiful price delivery. If it's going to be a good month, obviously. And then once you get to the latter portion of the month, like we are right now, it's the 24th of May. You run the risk of it trying to cap that monthly range. And many times, just like in the daily range, the end of the day, many times either reverses to cap the daily range, or it hits a level and then consolidates, and that's how it ends up capping the daily range. So the same thing happens when you're looking at a weekly power three or a weekly candle, a weekly range, a monthly range, a quarterly range, and a yearly range, right? Because power three fits all those intervals, but you just have to understand how to break them down. And when you're able to break them down and classify what phase we're in when it comes to the power three, for a quarterly range, a yearly range, a monthly range, weekly range, daily range, hourly range, right? You're able to then kind of decide like what's a more likely characteristic versus what's not, right? Like what is the likelihood of this coming down into the middle of this? Well, because it's the end of the month, right? Maybe that's what they choose to do, is just kind of hang around. Maybe they do choose to come down into here. We are technically not closing outside of this high extreme to that low extreme. So we're at that upper portion of this previous consolidation. It's aggressively repriced, but again, until it shows respect to this, there's still a risk of it coming down into this. But preferably, like I said, we do not want to see this target this too aggressively if we're going to look to see this go higher. And again, something that's hanging over us is the yields and what's going to happen with this new Fed chair. He may decide to cut rates right out the gate. If he does cut rates right out the gate, we will see this thing tank. And then we'll see the stock market rally, right? Because cutting rates equals bullish generally for the stock market because it stimulates economic growth. It's cheaper to borrow money. So that means that companies are going to expand, right? And things just become, cheaper in terms of business expansion, right? And all businesses are looking to expand. But that's why cutting rates really, really rapidly pushes the stock market higher and then has a negative impact on the US dollar, right? The yields drop, so does the dollar, right? The yields rally, so does the dollar. The bonds drop, so do the indices, right? The bonds rally, so do the indices. And then obviously the reverse correlation between the dollar and those other assets comes into play as well. So again, for the dollar, we're going to be watching this order block because we're closing above it. Unless it violates that, price is still respecting that. An order block, a breaker, those are all classified as well as a variation of balanced price ranges. Okay, because if you think about it, this is what an order block looks like, right? Then you got that open price there. Price comes back into it. Why does it respect that midpoint or that lower 25%? Because we already have buy side and sell side, right? And again, you could look at the breaker as well. It's a very similar thing. You could have a 1 hour order block, but a 15-minute breaker because it has multiple candles, right? When you break it down, those are all balanced pieces of price delivery. So that's why when you see this pattern form, 50% should be respected, right? So that same principle is what we'll apply here with this order block here. Okay, so it should be balanced in there. We also have sell side and buy side delivery. We also have this reclaimed fair value gap being traded through once more, right? There's been so many times it's offered price delivery in there, right? So we're in between this price delivery and this price delivery, okay? So we got 50% of that one and we got 50% of that one. We're basically in between those levels. So in between those levels, we've already balanced this out now, so it's completely balanced. So they're going to have to make a decision. And again, it's going to be a lot of the Fed doing something that's really going to end up sending the dollar outside of this huge consolidation that was driven by uncertainty, honestly, and a unfriendly Fed to business that we've had for quite a long time. So now we're going to have, they're going to take the chains off the U.S. economy, I feel like, and things are going to start to really amplify. But hopefully it's done in a responsible way, because it's a very delicate balance, and the U.S. is in a very delicate spot financially with our debt and all this stuff taking place. So just pray that they do the right thing, right? But yeah, so with that being the case, this order block is going to play a significant role. I'd like to see if we can, continue to stay above it. Maybe it looks to shoot down and take this out, but it has to be just a wick. If it's a full body that just breaks through, then obviously that could be a problem. And then say another candle forms here that shoots a wick into the 50%, right? And then it just keeps going lower. Yeah, it's a beautiful drawing, isn't it? But yeah, preferably, given where we're at, price is going up. So we'll see what happens here. And then we'll also keep tabs on the yields as well. I'm being repetitive because I want you guys to really understand what we're looking at for the dollar, for whatever asset we're looking at, but then how these other assets come into play as well. How you got to think about these other things too. And then, of course, the current pieces of price delivery. If we get this to rally up, we'll have this wick to also measure out as well, this largest wick. And then, the next candle, we'll have to respect it, and then, potentially continue, right? So maybe a wick there, maybe a wick there. But all of this is going to resonate from, price taking stops here, very, very light, shallow stop run. So they are equal lows. But these equal lows here came off of this bullish order block. Again, we talked about this as well when it was trading into it real time. So now we got a response off that bullish order block after a stop run. We called this entire run lower. Just go back and look at some of the videos. Then price came and took these out. This is a quarterly fair value gap. That quarterly fair value gap had us trigger in a sell-off, right? We were looking at that as well. Called that whole move lower. Seen this fair value gap. Price ended up, wicking through into this order block here. And then this wick, like I was just talking about a second ago, we've had our eyes on it. And then, of course, we saw the opening up of price up into this liquidity void. So that is essentially, in a nutshell, all the stuff that we've talked about over the last couple of weeks, months at this point. And again, we've narrated this step by step, minute by minute, day by day, week by week, and it's all pretty much worked out exactly how we've called, all recorded, right? So again, now we're here. So this is what we're paying attention to now for the rest of the, for the continued months to come, right? So yeah. So yeah, in a nutshell, we're watching for this here. See if the next candle can open up. We do have this low, that's Friday's low. So that's liquidity that's important. Every time you look at a chart, the first liquidity you're wanting to pay attention to, first off, you want to start from the monthly, then go to the weekly, then the daily. Every time frame that you're on, that current candle, high and low, like in this case, this high and that low, that's the previous week's high and low. Before price does anything, if it's going to come up here, or if it's going to go down here, or wherever you think price is going to go overall, it's going to have to look to target either this high or that low, right? So it may look to open up, take a dive, sweep out that low, respect that reclaim fair value gap, and then go up, right? Or vice versa, right? Price may open up, rally up, take out this high, and then look to go lower, right? But regardless of what direction you're looking to see price go in, this is your first and foremost liquidity that's important. And it's going to be the same when you move on to, say, the daily chart. Okay? We got the current high here, current low. That's Friday's high and low going into Monday. Then we also have this high and that low. So that's another previous day's high and low. Then you have another previous day's high and low. Okay, so this low, these consecutive lows in here, this low and this low, that's all sell-side liquidity that's more significant than this would be until it gets down into there. These are the first things it has to take hold of if it's going to end up going down to this level. So, with common sense, those liquidity pools are significant for your draw if you're going to go short, rather than this over here. This may be your main target. But does that mean that because this is the main target, there's nothing else you can look at to frame a setup on? Of course not. You have these daily lows here that can all be significant and play a role in a short position that you maybe find on the 1 minute chart. Does that make sense? This is a very simplistic thing to think about. You'd be surprised. Almost every single student that I've ever taught privately and then, talked to in DMs over the last, 4.5 years, they've never looked at it this way. And I don't know why. Because this is the most important liquidity. There's like buzzword liquidity pools that people talk about, like session highs and all that, which are significant. But when it comes to higher time frame narrative, for whatever reason, people just disregard the closest liquidity pools. When you're on the daily chart, that's a pretty sizable range. You could find a reasonable amount of setups just simply looking for this or this. Everyone gets focused on, things that are really far away, right? Because they want to be correct long term. But again, that's obviously something achievable, and I teach how to do that here. But again, the most near-term liquidity, the current high and low for the daily chart in the last week, right? The highs and lows of the candles from the last week on the daily chart, those are significant. That doesn't mean you disregard levels like this or levels like this. You keep them in mind. But if you want to have a setup potentially every day to be able to frame something off of, right, and reliably target certain things, this is one way you do it, right? Thinking about it this way shows you that there's setups every day too. And then you also add the other things, right? Like session highs and lows, hourly highs and lows, 4-hour highs and lows, 15-minute highs and lows. And then things just open up even further with how many opportunities you have depending on the style of trader you are. Okay. So again, any asset you look at, the first thing that you want to pay attention to is where's that current high, current low, right? For the weekly, monthly, quarterly, whatever time frame. And then on the daily, right? The previous week of highs and lows. And then you can also do the 4-hour, right? But many times when you go from this daily to this to a 4-hour, the 4-hour levels are on the way to some of these daily lows, daily highs. So, I mean, you could still frame things if you're on the 1 minute trading a 4-hour range, 4-hour liquidity pool on the way to the daily high, daily low, which is on the way to the weekly high and weekly low. It's very fractal, this idea, right? So just keep this stuff in mind. Some of the more basic stuff that most people don't really pay attention to because they're looking for all the new shiny objects and this model and that model and this PD array and that PD array. But it's when you gain more experience, you're going to realize that the basics you'll always come back to the basics. So you might as well master them and spend the most time on these basic things. And previous days highs and lows, weeks highs and lows, months highs and lows, session highs and lows, those are all very, very basic liquidity pools. And every single day, listen to me, every single day, those levels are going to be there. So what does that mean? Every single day, you could potentially frame something targeting those levels. Okay, unless of course it's consolidated. But even in consolidation on the daily chart, there's still a daily high or daily low being met. You could see that this one didn't meet those daily lows. So, and on top of that, this was still bullish. So it continued to take daily high, daily high, daily high, daily high. Every single day in this string of candles could have targeted the previous day's high. And I guarantee you, well, I haven't looked and I don't trade the dollar, but there's a high probability that there was something that you could have framed if you go and dig in and look for your model to target the daily highs. Because every day a daily high was taken, right? Maybe your model wasn't there, but nonetheless, the thinking still remains. The concept remains. So again, just to reiterate, the first and foremost thing that you look for when you go to a higher time frame chart and you're starting your analysis, where's the current high and current low on the monthly, weekly, and the last 5 days of the daily time frame? Where are those highs and lows? Right? And then you can start to move on to, okay, well, what else is a little bit further away because it has to take this first. Because it has to take this first, doesn't it make sense to try to frame a perspective on these first before you start to broaden your horizon and look for something that's probably going to take a week or more to target? If you're a scalper, this is very significant information. It's very simplistic, but again, you don't hear no one talking about it, right? And you rarely see anyone even use this stuff like this. They want to do all the advanced stuff to sound like a rocket scientist. And it's like on the back end, they're doing damage to their ability to be profitable. And most of them aren't profitable anyway. You know, like they can't even do half the stuff that we do, showing it publicly. So, but yeah, so hopefully I was able to drive that point home. I've talked about it a lot. I always talk about this every week, but I know there's some new students. So hopefully you guys wrote that down. So yeah, again, that's our level that we're going to watch. We'll see if it can respect that. I want to see if we could take out this previous week's high here. And then, of course, we also had the previous week's low. So we're inside this range. So the next candle that opens up is going to be inside that range. And until it decides to break out of that range, we're going to have to use the weekly high and weekly low, and then all these sell side liquidity pools here, along with this high here, which again, that is Thursday's high, which was the previous week's high, okay, before it came back down into that range. All right. So with that being said, actually take that, take that off. I think I could take that off as well because we already basically fulfilled it. And yeah, do you guys have any questions about anything? Very important stuff. And I hope you guys have understood like all the different assets we've talked about so far. It's going to be an interesting week. Yeah, I agree, Tony. I agree. But yeah, so that pretty much does it for the dollar. Move on to foreign currencies, GU and EU. This is another asset that we've absolutely had precision on. And it's been a very choppy back and forth overall range, right? It's been very, very sideways. But that doesn't stop us from doing anything. It doesn't matter. We could trade any condition. It really doesn't matter. Okay. So let me actually take some of this off. So yeah, we talked about this breaking down well in advance. When price was up here, I was saying, let's watch and see this accumulation, manipulation, and distribution if the dollar was going to go higher. Okay. And the dollar did go higher, like I predicted. Right. And so once that began, the currency started dropping down, changed state of delivery, and I was calling for these equal lows here. If you guys have been with me for a while, you guys know. I know Tony remembers. Tony's with me every single week. We definitely called this pretty much as always, right? And it did exactly what we said it was going to do. I don't trade currencies anymore, but it did exactly what I said it was going to do. It unfolded power 3 exactly as we said it was going to do. And we used the supportive analysis from the other assets that we just looked at to further drive home the point that this was going to go lower before it ever even went lower. Before it ever even gave you this displacement, we were already calling for lower prices. Right? And again, that's just a powerful ability you're afforded when you take what I'm teaching you and go apply it and practice it over months. Okay. And again, we have this suspension block. I've talked about this as well. That respected and continued to drop lower, lower, lower. So same thing here on the euro, just the opposite for the dollar, right? If you would have targeted previous day's lows, every single day, it targeted previous day low, previous day's low, previous day low. Okay. Respected this bearish order block, just like how this is respecting the bullish order block. Okay. And it looks like we may look to continue to go lower. We do have this high up here. We're trading into a high resistance level. So I wouldn't be very surprised if they were to shoot like a wick above this. We have this high to that low with a failure swing that's broken down. So aside from this suspension block, just like we talked about last week, this is a mitigation block. So we have up to that level that needs to be respected. This displacement should not be required to trade too deeply into it. If it does retrace, preferably it doesn't. Preferably it does exactly what the dollar's doing here, assuming that it's going to keep with the overall direction that it's headed in right now, which looks like it wants to go lower. So we'll see if this wants to continue to remain the sentiment. Our full target's met, as you see here. We called for that. Remove that now. Okay, and down here is going to be the completion of the market maker sell model. We do have this failure swing in here, but it is part of consolidation. So it may take a little while to get down there. I do see this as a market maker sell model. If we were to go down, what was it? I think it was the 16-hour chart. We had this accumulation in here. I talked about how that was going to be a balanced price range, an inverted balanced price range once it gets below it, and it did just that. You notice how it never closed below it on here. It just created basically a rejection block and then rallied up, came back down into that rejection block, and then rallied again. All of this was accumulation before it dropped, which again, we were ready for and called well in advance before this even dropped. And so now that we're down here, I'm going to require it to really aggressively reprice higher if I'm going to be bullish. We do have this weekly fair value gap here for GBP. So we will see how that unfolds. I would say that if it overtakes this fair value gap, it's going to have to actually break through. Where's the lowest? So that is the lowest down candle there. So that right there is part of the breaker. So low, high, lower, low. It's going to have to really smash above that in order for me to really trust that this is going to be bullish. So this just looks like a retracement to then go lower. It's ironic how similar this price action looks to this, isn't it? It's almost like they're correlated somewhat. It's almost like one influences the other. Interesting, huh? So again, depending on what the bonds do, I think that, and of course the yields, that's going to determine what this is going to do. We are technically inside of a pretty large just range, right? The higher in time frame you go, the more nasty it becomes, which is generally not the case. Normally when you go to a higher time frame, things are supposed to clear up a little bit. But in this instance, you go to a higher time frame and things are being really, really wrecked, right? And it makes sense with all the stuff happening in Europe. But, you know, we'll have to just be cautious and wait and see. But this is, you know, part of the reason why I trade indexes over currencies these days. Well, for the last couple of years. It's just, I've just seen that it's just been better. But it doesn't mean there's no opportunity, right? I mean, we're calling this just as accurately as anything else. So it's not like things change. You just have to be, you know, cautious and know what you're looking at, because you could be fooled very easily in this type of environment. But yeah, so we'll keep tabs on this. As long as it keeps respecting this midpoint of this order block, order flow is going to continue to confirm downside delivery. We did have this mitigation block being respected there pretty perfectly. It's treating it as a BPR down there. Mitigation blocks are BPRs too. Breakers are BPRs. Order blocks are BPRs. Overlapping fair value gaps, basically the inversion fair value gap at its core is a BPR. Just to name a few, right? Consolidation that gets left and then revisited and then pushed away again. Kind of like this, right? Accumulation or consolidation breaks down, returns into it. That should act as a BPR as well. Many times, obviously, it has a breaker or some other PD array attached as well. But the overall range and logic hopefully makes sense. So again, with that being said, I do notice here that we have SMT. So that's just a further, we got SMT on both sides, at the highs and at the lows. We got GBP, the strength holder. And we have the euro being the weaker, creating lower highs and lower lows, while GBP is making higher highs and higher lows. So it's definitely something we're going to have to observe It's kind of 50-50 right now, right? We could go off of the larger perspective here. It does look like this displacement is returning off this accumulation, manipulation, distribution. Seems like we're in rebalance mode. So depending on how this treats this level here, I don't want to see it go much further. If we end up taking this high out, that shows clear as day that these equal highs up here are going to be targeted. Again, this will happen if they cut rates and the yields decline. That should send the bonds higher. And if that happens while this displaces above this high, you just simply switch this to a market maker buy model. This is second stage distribution. And once it's above that, when it tags it, it should quickly be able to get through this high, right? Maybe it, somewhat dances around because this is consolidation, right? Maybe it looks to do something like this, right? But once it takes this out, once it's above that, the low of that, preferably the upper 25%, right? So this whole area in here, once it gets above it, we don't want to see it get down below on a closing basis. And then that would ride us up to the buy side up here. And maybe we could catch some type of market maker buy model in here as well. That's inside this larger one. Okay, but that's what my opinion and protocol will be if we do see this overtake this fair value gap in here. For now, though, we have to just go off what price is showing us in here, right? It just simply looks like a displacement, retracement, it's rebalancing, and accumulation, manipulation, distribution phase. So until it's proven otherwise by, giving maybe a failure swing and then displacement overtaking this fair value gap, maybe it returns into that, does something like this, right? I wouldn't be surprised about that either. That would just be a market maker buy model. But where we're at right now, we have to require it to prove that it's not going to want to go short, right? And the way that we do that is by waiting for some of these things I just talked about. We came off SMT here. That was another reason why I assumed this was going to go lower, aside from the other factors. So again, I'd be more cautious with the currencies. But obviously, if this does respect this and goes lower, we have the market maker sell model idea that's still potentially going to unfold. And then if you can get this to basically get through this gap in here, say it gets below this low, this buy side to sell side can also be treated as a BPR. This fair value gap in here being overlapped and traded into should act as a BPR. And those levels would support, or that overall view would then support us getting down into here, and that would be the direction we will look to trade. But again, I would be cautious in here. Let it prove itself. We're going into a holiday. We're going into the end of the month. So don't expect them to do some crazy move like that. They could, of course, anything can happen. But the odds are not in your favor to be expecting that type of stuff at this current time. Okay. So yeah, that's my opinion on the currencies. We'll look to see if it can continue to go lower. Otherwise, these are invalidation levels. And if it tags them, then we go the other way. We're in the middle of this range too, from this low to that high. So it could, because it's the end of the month, look to consolidate inside this weekly fair value gap, potentially inside this suspension block as well. Okay. So yeah, that's my perspective on that. And now we'll quickly go over the indices and I will let you guys go. I don't want to go over 2 hours. Okay. So I talked about this last week as well. Okay. For those of you that are with me all the time, we talked about this rejection block. We framed a setup off that rejection block, going short. See this real quick. Talked about that regular trading hours gap. I mean, we talked about so much stuff. I'm not going to get into every detail that we've talked about from the last couple of weeks, but it has been ridiculous precision. It's been absolutely amazing. It still shocks me. Maddie said earlier, what is this website that you find the news on for the week? That's Forex Factory. Forexfactory.com. So yeah, let me see. See, again, we still have this regular trading hours gap down there. Right, all of this delivery was inside of a daily bullish fair value gap. So right there, wait, where is it at? Oh yeah, it was this one right there. So it still looks like we created the momentum order block I talked about the other day too. It's got respect to that. Once price got up above here, as you guys could see with the note that I have written out here, if it was going to continue to drop and go short, and we were going to, in fact, have a trustworthy sell-off, which is what we were kind of making sure we observe and, we don't discount it, because seasonality-wise, it was bearish. So us capturing the short idea, timing that short idea as we did, was valid. Everything that we talked about leading up to this, it was highly effective. But this taking place here, when it displaces, sets up a bearish, like in this case, a bearish breaker. Once it trades through that, especially if it respects something like this, right, which is the momentum order block, or just simply a change in state of delivery, right? Or say there's like a breaker that forms down here too in like a lower time frame. Once it proves that it wants to respect those levels, and then it invalidates something like this, you can't just discount that, because now this bearish breaker could have an inverse nature to it. Okay, so now this is an inverted breaker. Okay, this breaker candle there that should have held this support. Once it turns and invalidates to be resistance, it now turns to an inverted support level, right? We also came again off of this rejection block. We actually targeted that rejection block too as it ran up into it. Those of you that were with me in the private group, walking all this price action with me. We did hit this 4 standard deviation projection from this low down here to one of the lower time frame swing highs and lows. So from here up to that high, basically pick the high of the day and high of the week, right? Got us up into that. So let me see. So yeah, we still have a inefficiency down there. You see what that markup was referring to? This regular trading hours gap box, right, from this lower perspective, we're on the 8-minute. I don't ever come down to these lower time frames on Sundays, but we'll do it right now. Price is gravitating towards that level. It had sell side and buy side delivery. So just like with the dollar, how I talked about the liquidity void idea, the same thing can be applied to regular trading hours gaps, right? This lower portion here, it's inefficient on both sides of the market. Okay, so whenever price does not offer those levels and price is running away from it, you do have to consider, if it was to attempt to pull back into that range, there is a likelihood for it to come down into that. And honestly, this looks very, very clean for them to want to come down and target. So I do see, to start the week, I do see this as a possibility here for price to open up, maybe gap through that, or maybe just simply offer price down into those levels before it looks to try to go through to the buy side. And if we take that and paste that in there, we have our inverted breaker level resting right there as well. So it would make sense if they did want to come back down into that. That would be a PD array I'd be looking at. Let me take that off. We got a previous day's high here. I'm gonna keep that rejection block there. Okay. So price is kind of just in a range now. If we go from this high extreme to the low, we're in consolidation. It's the end of the month, right? It's totally understandable that this is what's going to take place. They may not want to run too aggressively. They've already kind of expanded aggressively throughout the month. We now have to close out that monthly candle, right? Look at the month, what it looked like. They have to close the candle out in some way at some point, right? Barely did a close off the high last month, but they're showing a little bit more of a significant pull against the high that formed here for this month. So again, I would not be surprised if they look to come back into that range. So we're going to deal with the things that are inside this range. We have the rejection block that we framed to set up to and away from in my private group. And then we also have now the inverted breaker here. So these levels are going to be pretty sensitive. I do feel like they're going to play a role. Whether price wants to continue to get outside of this buy side liquidity or not, or if it wants to target the sell side here, I don't think there's really a high probability of that doing that this week. They may have to wait till NFP, which again, it's literally next week. So they may look to try to build up liquidity there in this level. You see the Dow finally made new all-time highs, huh? Full target was met that we outlined. This rejection block was treated as such until it wasn't, and it created a bullish breaker and then got us up into that further buy-side liquidity. So we'll see what happens. I do believe that, we should still continue to see this go higher. My invalidation for this being bullish, we're going to have to really dig down because this began a move that we were observing this breaker in, right? And if that breaker would have held, the whole sentiment would have been bearish. And we would have also had the one change in state and then a second change in state. If this would have ended up getting below here, like I talked about live with my private group all week last week, until we saw this, right? And then once it got up above this breaker high, that was it, right? Then we looked to target the rejection block, framed to set up into that. Then we framed a market maker sell model. Whoops. We framed a market maker sell model off that rejection block. Okay. Go to that 5-minute chart. Let me see. Yeah, this buy side delivery, that was a market maker buy model. Go down to this 1-minute chart. We actually called 2 shorts in here, right? One right here that capitalized on this level, targeting that low. End up getting 56 points live with my private group. And then price came up, tagged this, and then I sent out the idea of this going even lower, targeting this, equal low, failure swing down there. And then that one beautifully delivered. Right? You notice the timing, right? We're timing price perfect. In a macro there, this one was slightly away from the macro by 3 minutes, but nonetheless, we continued to see it go, and we called 2 perfect trade setups, just simply targeting 20 to 30 points. But again, it pays to pay attention. It pays to be around people that know what they're talking about, and we prove that that is the vibe here in this community every single week on YouTube and every single day in my private group. And I have many private students that hop on, and I invite you to come out and say I'm a liar, because this is the facts. And we prove it every single day. And so do they, right? My private students are lethal right now. We have many that are on their way to achieving that. But yeah, so let's continue to get away from this real quick. Let me make this pretty clean before we go so you guys could just get a good idea. So again, if the dollar looks to continue to go higher, we may see this rejection block become significant and end up getting us back down below this. We got to kind of wait at this point until we can get above this high. Once we get up above this high, that's going to be a bullish breaker. And then we could be really certain that this will be a balanced price range. And then we should be able to just get a retracement into the breaker candle, that upper candle here, and then see price go through to the buy side. But for now, we basically came up, hit a PD array there, and now we pulled essentially close to the equilibrium, 50% of the range, right? So, and then again, we have that regular trading hours gap I just highlighted for you guys on that lower time frame. We'll see what happens with the open. I do think that we should be able to reach into that, at least to try to offer it, and if it is going to go higher, we have this change in state of delivery here, right? So consecutive down candles with a stutter candle, targeted liquidity, price gets above it, easily used it as basically an order block, price respected, and off to the races to complete the market maker buy model, targeting the rejection block. Okay. So again, going into this week, we're going to see, can this respect the 50%? Can we get price to get above this high? If it does, that's a breaker. And we'll use that as the crux of our bullish overall trend that we're going to try to be a part of. But I wouldn't be surprised, because it's been so bullish, that we end up seeing like a TGIF style end of the month for the remainder of this month. And then maybe we see price even pull back aggressively to come and try to wipe some of this out. Because again, in the grand scheme of things, if we go to the weekly chart, if this was to pull back down, we have already kind of fulfilled this. But if it was to, say, reject this and then pull back down, it doesn't upset the overall bullish trend. It's still bullish. We need some serious slam down to, and maybe even invert this level. I'd feel the most comfortable if I'm going to look to be bearish overall. I'd feel the most comfortable if we can invert this level here. Say price breaks down through it, inverts it, trades into it, shows no respect to get outside of it, and then just continues to pump lower. That would be where I would really decide that overall the narrative sentiment is bearish. But for now, any retracement is going to be looked at as simply that, a retracement to then go higher. And then we'll frame setups, both counter trend and with the trend accordingly. So yeah. So with that being said, do you guys have any questions? Again, the main target, like I just discussed earlier with you guys, the main liquidity pools is the previous close proximity high, the previous high, most recent, and then we have the low too, the most recent low. So those are your liquidity pools to the extremes for the week, because all you really need to know is where this next candle is going to go for the week, right? So keep your attention on those levels. When it comes to the daily chart, keep your attention on Friday's high and Friday's low. There's a little fair value gap in here, right? So yeah, we'll keep tabs on that in there. We do have regular trading hours gaps down here that may end up becoming a target if we do break down and get back through equilibrium. Actually, oh wait, no, I don't want to move that. I want to keep that on there. Okay, let me actually make that smaller. So yeah, we'll keep tabs on that. If it breaks down, that'll be something I want to target, but I'm going to remove that because we got the fair value gap there that held up. We have a new week opening gap here, new week opening gap there. So again, price is going to have to really break down through those levels in order for us to really reliably look to take out that sell side. This is another level that if you go back to some of my commentary, I talked about this as a market maker buy model, and I was correct yet again on that. Okay, that was another piece of the analysis that allowed for us to keep going higher, to kind of know what to do, how to navigate everything. We had SMT at the lows here that I called out. And again, when price was down here, I was talking about this and I had this marked off. Same element that we were talking about with the DXY and what we're talking about here with this one. When we were way down here, I saw this as a huge regular trading hours gap that was left in a bullish trend, right? And so because we're still bullish and narrative hasn't changed, once it triggered back in line with that, this was the main draw. And then that was coupled with the rejection block. And, you guys see the result. Right? We basically called it before the fact. we did 100% call before the fact. And hopefully it makes more sense now if it wasn't making sense. But hopefully by this time it makes sense, because we've been narrating all of this in great detail for literally weeks, months, years at this point. But in this case, for the last couple of weeks. So yeah, do you guys have any questions? Because if you guys don't have any questions, I'll let you guys go. Just let me know if you need anything. If you guys have any topics that you'd like me to cover and make a video about, maybe amplify, or maybe there was something in this call that maybe doesn't stick as much as you would like, just let me know. If you guys have any struggles and whatnot, remember, I'm here to help you. I don't care about ego. I don't care about being the best trader on the internet. I know what I do works, and I know it helps students. So I'm here to cater to you guys, not to hear myself talk, right? I could care less, you know. If you guys could do me a solid, though, and like the video and subscribe to the channel if you haven't already, it definitely helps me get in front of more people so I can help them. You know what I mean? I don't care about fame, but I do have a goal of trying to help over 100,000 students at some point. It doesn't have to be in my private group, but on YouTube, I think I'd be satisfied with the impact if I can help over 100,000 people. Because I could just trade and not do anything. I just live my life, go buy land, get Starlink, and live off the grid and just trade for the rest of my life and be away from society, which I wanted to do at the start, right? It's still something I might do eventually, because you just get the luxury to do stuff like that as a trader. I think it's more of a peaceful lifestyle. But before all that, before I go dark at some point in the future, I want to leave as much of an impact as I can, because I'm just very grateful that God blessed me with this skill set. He blessed us with the ability to have ICT like blaze the trail, so then we can come behind him and help ourselves, but also help each other and have an impact on people around us. So that's a big goal of mine, to help as many people as I can. I know this stuff works. I prove that it works. You just have to follow the things that make sense to you. And hopefully you can do something very, very admirable with it. And then hopefully you guys that do learn from me, that do become successful, can also have that same mindset and pass it along. We don't need no more egomaniacs, okay, that need people's attention so they feel justified in their own skin. We don't need all that. We do need, in this industry, more sincere people that are truly trying to help and are good people. You know what I mean? So, and I think that pretty much all of you guys that follow me, because of my teaching style, stick around because you're that type of person. Especially those of you that stick with me this long. And you guys are the ones that are going to succeed. This takes a lot of work. It's very difficult. But again, taking the good advice that's given to you, building that discipline, really leaning into the things that you know are significant, that you know you shouldn't avoid, while you also never quit. Constantly show up for yourself. Do the back testing and all that stuff. Eventually you'll get there. And again, my whole reason for even having a social media is to try to help you guys get there. Right? I can't guarantee you'll get there, because I'm not, it's just, that's the nature of trading. Nobody can guarantee. But, it's my hope that you guys take the information, study it, use what works for you, and then help me along this mission of helping people. By you also spreading the blessing too, once you achieve it, once you manifest it. So yeah. With that being said, don't forget to like the video on the way out. Subscribe to the channel if you have anyone that you think can benefit from these types of conversations, this type of analysis, this type of teaching. Don't hesitate to send them the videos, or just simply invite them. Right? I like the word of mouth. It's better than a bunch of random signal junkies, but I don't discriminate for them, because I guarantee the time they spend here will shift them at some point, because this stuff just works so often and it's undeniable. So eventually they get convinced. But yeah, so on the way out, you guys, don't forget to like the video, subscribe to the channel. Hopefully you guys enjoyed today's call. Hopefully you guys got a ton of value. If you guys have any questions, let me know. I'll be around today. And then if you guys send me a DM, I'll get back to you. Just send me some questions if you guys have any questions or topics you struggle with, because that'll kind of help guide me into what I need to really start leaning in more on. But other than that, we're just going to keep chugging along. Hopefully you guys have a good rest of your week or weekend and have a good week. Remember, it's a holiday. Don't do anything stupid. And for those of you that are here on YouTube, I will see you beautiful people on Tuesday. And those of you in my private group, get ready to see me bright and early tomorrow, as always, at 5 a.m. Pacific Standard Time, and every day from that point on, as always, because we're live every single day in my private group. Okay, so yeah, with that being said, God bless you guys. Appreciate the love and support. Hopefully you have a good rest of your weekend, and I will catch you beautiful people on the next one.